As for the agenda, well, a short introduction about myself, about Sepia Solutions, an overview of the webinars that have been organized this year, and a question to you for future suggestions. Then we'll outline the very simple business case for today. I will present which fraud indicators or risk indicators or focus indicators, whatever the term is you'd like to use, I would like to look into using data analytics. Why do I use Arbutus Analytics or Arbutus Analyzer? And then into the practical thing, how to implement the fraud indicators that we defined 2 points earlier. If you want to later on get started with this type of analysis, I'll show you some next steps that we could go into. And of course, there's a Q&A at the very end of this webinar. About me, so my name is Alain Rousseau. I am and have been passionate about data analysis for quite a number of years and GRC tools in general. What I like most is actually doing the training and implementing projects. So that's really what gets my blood flowing. And as customers can attest, I simply can't resist a data analysis challenge. Sepia Solutions focuses only on GRC software. At the moment, those are 2 tools. There's Pentana Audit and there's Arbutus Analyzer, which is the tool I will be using today to illustrate the fraud indicators. And because basically we or I am very highly technically skilled, I can assist the clients with their implementations from A to Z. We've been working with the IIA for, well, since 2010, basically, as a sponsor or participant or member. As for today, I decided to start very simple. So we set out with an idea of a large data set, maybe thousands of records, maybe millions of transactions. All depends basically on your business, on your topic. It could be sales, it could be purchases, it could be invoices, maybe cash transactions, or even expenses. Now, in this very simple data set that I will be working with, we have only 3 fields. That's not a lot. So we have a timestamp, a date-time combination. We have the amount, so the monetary value, and we have an identity. I decided not to call this field like department or client or vendor or employee because basically it could be anything. So whatever your transactions are about, it could be all the transactions per employee. It could be transactions for a particular vendor. So I just, let's say, broadened the scope and called it identity. And then you can see what might be applicable in your processes. Now, if we have a requirement to review the transactions, what I would like to avoid is sampling, or what I would call dumb sampling. Now, I don't have a problem with sampling, but just selecting, let's say, 20 or 30, maybe even 200 transactions at random out of 1 million or more transactions, what does that really tell you? Yeah. So rather than doing a simple random sample or even a monetary unit sample, I'd like to focus on transactions that already have a, let's say, elevated risk score. Yeah, so let's try to put some more intelligence into that risk-based analysis. So which fraud indicators would I like to illustrate today? Right. Now, these are what I call basic or very simple fraud indicators. One of the reasons that they're so simple is that they are a single transaction analysis. So let's say line per line, record per record, we'll look into the details, rule-based basically. And we'll look at round amounts, 1 million, 10 million, or whatever you find or define as a round amount. We'll look into zero amounts, transactions of 0. Is that normal or not? Again, that depends on your business. Amounts near threshold. So if you have a certain, let's say, approval or a transaction that requires approval from the manager above 50,000 euros, for example, people might want to stay below 49,900 or something like that. So we can look for transactions that are just below that limit or threshold. We can look into transactions performed during the weekend or transactions performed outside of working hours. And I realize this again depends very much on your business, on your process. The same for transactions on holidays, public holidays, or any non-working days. Why do I use Arbutus Analytics? Why does Sepia Solutions basically distribute that software? Well, these are a couple of reasons. Now, this is not a commercial webinar. I'm not doing, let's say, a lot of commercial or marketing things here. That's not my intention. But if you do use a data analysis tool, and you may use others, I think it's important to look for a tool that is actually designed to do data analysis and not any, let's say, standard Office application that can do data analysis, but is not designed to do that. Also, throughout your analyses and audits, you probably need to access many different data sources, so that tool needs to be able to cope with that and have no data size limit. In the practical part of this webinar, we'll see that I'll be working with approximately 1.7 or 1.8 million records. As another advantage is everything I'll be doing will generate an entry in the log. So everything I do will be entered into the log, and that log can later be used or reused basically to run as a procedure, so to automate the analysis. These are just a few of those, I think, very, very important aspects of any data analysis tool. Yeah, again, this is not too commercial, so I will leave you with this slide. Basically, if you want to learn more, that's absolutely fine. As I said, I like doing training. I like doing implementations. So that's basically on the right-hand side there of the slide. It's the ecosystem. So it's not just a tool, it's also the support you could have. Okay, let's actually get started with the first indicator. So I would be looking for the round amounts. Okay, let's get to the tool and the data first. So here we are. This is looking at the tool. Again, this is the tool I'm using, Arbutus Analyzer. And what I have here is the table called transactions. I have 3 fields, as I mentioned. I have a timestamp. I have an identity. Again, could be the employee, a client, a vendor, and I have the transaction amount. Very simple. If you would look at, for example, expenses or details, invoice details, you'd have other fields with the description, article numbers, product numbers, and so on. This is just to get started. Also, if I just count the number of records, you see here the button count, it will count the records, and I have 1 point, if I am allowed to round, 1.8 million records to work with. That's not too bad. Yeah. And as you can see here, all these frequently used commands are in this ribbon, or we have additional commands here in the different menu options. And if I open up the file or the table here, which is called transactions, this is logged. As you can see, I just open it. If I close it, I open it up again. I go to the command log. I see that I've closed the file and I've opened the file. So even that simple action is being logged. Now, if I would look for round amounts, the function of modulus is your friend. Basically, modulus can be used to calculate the remainder of the division of an amount divided by. So to illustrate the point here, I will add a column to the view, but quite importantly, this does not change the data. So I can add a column to the view without touching the data source. It's basically in a read-only mode. So if I add not a data column, but an expression, we get to what we call the expression builder in Analyzer. What we have is here the part where we define the expression, all the fields that we can work with, all three at the moment, so not many. And here all the functions, I don't know, about 120 functions if I recall correctly. They're divided in groups, and the modulus is part of the math or mathematics group. Here we are, mod. So if we use these parameters and we replace number by amount, and we divide the amount by, let's say, 1,000, that would get us the remainder of the division of amount divided by 1,000. Okay. Again, this is just to illustrate the principle. And I can see already in the first transaction, this is really by chance. It's a very round amount. So if I divide 500,000 by 1,000, the remainder is 0. If I divide, for example, this one on record 19, 2,741 by 1,000, the remainder is 741. So I will use this modulus as a basis for my analysis. I can remove that without changing the data. So what I would like to do is I would like to add what I call a conditional computed field. Yeah. So for that, I go to this table layout, and it may already get quite technical by the looks of it, but it's really quite simple, I would think, is we're going to add a new expression. We're going to add that new expression, and we are calling the new field FI for fraud indicator or focus indicator, FI_01. And the default value, that's basically the risk score for this field, would be 0. So all transactions start off with a risk score of 0. Now, if I would add a condition, again, this is where I then use this modulus formula. So modulus of, not number, but amount, divided by, let's say, 1,000. Okay, so that's the criteria. Oh yeah, it needs to be 0. So the remainder of the division by 1,000 needs to be 0. Then I would like to opt the risk score as such to 3, for example. This is arbitrary. This is up to you. This is what we think may be valid. Okay, so now I have a condition. If the remainder of the division by 1,000 is 0, then I'm going to add, let's say, the value of 3. I'm going to copy that a couple of times and say, well, if it's divisible by 10,000, it's even more of a risk. So I'm going to give it a value of 4, for example. Again, the values are arbitrary. And if I can divide it by 2 more zeros, I'm going to add a value of 5. Again, these can be incremented the way or continued the way we are working right now. Okay, so this is actually my first fraud or focus indicator or risk indicator saying FI01. By default, the risk score is 0. And let's say the larger the round number, the higher the score. And I can give it a nice title as well. Let's call it FI01, round amount. Okay. If this is too complicated or goes too fast, or you missed me clicking somewhere, please enter it in the chat. I'll keep an eye on it, or I'll try to anyway throughout the presentation. Okay, so this is our first indicator, and I would like to add that column to the view now. So FI01, I add that to the selected columns, and here we are. Here we have our first focus or fraud indicator. I can also use, let's say, conditional formatting. If I double click here, I can add a trigger, and just call it yellow, because I want to color the background in yellow if this indicator is larger than 0. So if it is An elevated risk, I want this in the background color yellow. Done. Okay, so there we are. Now I could try and scroll and then find additional transactions here in the list, or I could right click on the risk score of 0 and say, by way of quick filter, show the ones that are not 0. And then I find a lot of transactions which are basically 0 as in terms of amount. Now, I remind you that in the next focus indicator, we'll actually look at the round amounts. So what we don't want is to accumulate both risk scores. So I would like to modify the expression so that these 0 amounts do not, let's say, have a risk score just based on the round amount. Yeah. So I go back to my table layout. I'll just clear the filter here. I go back to my table layout and I will insert a new condition that if the amount is already 0, of course, the division will always result in 0. So if the amount is already 0, then I want the risk score also to be 0. I need to move that up because this is a first come first served type of, let's say, sequence or a switch or a case statement if any of you do some developing in code. So it will just see from the top to the bottom, is this true? Is the amount equal to 0? Then the value is 0, just as the default one. If the amount is divisible by 100,000, then the value is 5, and so on. Okay, yes, please. I can close this. Yes. Right. So now again, I will look for transactions for which the focus indicator based on the round amount is not 0. Okay. So I remind you, this is going through 1.8 million records, and I have found, let's just be sure, it's now going through this data again. It found 4 matches out of the 1.8 million records. These are the 4, okay? And you could catch those if you just eyeball the data, but I doubt pretty much that in that data set, it would be easy to find, let's say, going through that manually. All right. So this basically is this first indicator, the round amounts. The second one we've already discussed, the 0 amounts. And when I was preparing this webinar, I thought, yeah, but that's not really interesting, is it? It's a 0 amount transaction. But then I remembered actually when I was a student, I experienced on, well, I knew of, let's say, a fraud case when I was doing a summer job, basically as a lifeguard in a swimming pool. And later it turned out that 2 people were committing fraud using 0 amount transactions. What happened was when you go to the register to pay for entry into the swimming pool, some people have like a 10 session card, so they can enter 10 times, but they pay only 9, or you pay 10 and then you get an 11th visit to the pool for free. And what somebody did is they just entered 0 amount. So they would get the cash from the person, just a couple of euros at the time, yeah, but they would enter it into the register as a 0 amount transaction, as if this was the free ticket they would have on those loyalty cards. And later, the person who would then, the visitor to the swimming pool, gets to the next stage, they would have to hand over their ticket, and that's fine, and then they get into the pool. And a lot of those tickets were 0 amount transactions, so the person at the register basically pocketed the money. They still needed to enter a 0 amount transaction for that person to get an actually paper ticket to get to the next stage in the swimming pool. So then I thought, okay, let's leave that in, because depending on your processes, this might be something you would like to, watch out for. So let's add those again to the, let's say, list of indicators. So again, I'm going to the table layout, and I'm going to add a new field there, focus indicator 02. And the default risk score again will be 0. And I'll give it a nice name, FI02, also known as 0 amount. So by default, it is 0, but a very simple condition can't be much simpler than that. If the amount equals 0, then I want it to have a risk factor or fraud factor of, it's up to you. I'm going to go for 2 at the moment. There we are. That was easy, that was quick, that was simple. And I can add that to the view as well, FI number 2. And again, we have those numbers. I can look with a filter, so right click, quick filter, not equal, and find all those 0 transactions. How many do I have? I don't know by heart, so let's see. 22,000, well, and more, just above 22,000, okay? And there too, I could add a trigger, I'll just call it yellow again, that if that indicator is a value above 0, then again, I want the background there to turn kind of a yellowish color. There we are. And yes, I could scroll through the data just to find some of those transactions. Here we have a couple, but that's hard going with nearly 2 million records. If you have questions, again, you know where the chat is. Our third indicator is amounts near the threshold. What is the threshold? That depends on your process. So to keep life simple, I decided that I use as the lowest level 1,000, 10,000, 100,000, a million, and 10 million, just in multiples of 10 or 1,000 basically. And what I'm doing is, if people stay just below 1,000, let's say 999 or 995, then I would give it a risk score of 3 and so on. So let's go there immediately. In the table layout, again, I'm going to create a third fraud indicator, focus indicator or risk indicator, with the default of 0 again. I'll give it a nice name. Amount near threshold. So as I mentioned, the first condition is, and I'll be using another formula at the now, function, sorry, is the between. So that's in a logical group. The between, as you can see, the between uses a value. In this case, it would be the amount. And we want the amount to be between 990, for example, and 1,000. So if that value is between 990 and 1,000, then I would have, or I would like to see that as an exception. And I would like that exception to have the value of 3, not too high. Okay, I'm going to duplicate that and say, yeah, that's all right, but I have another threshold at 10,000, so I'll just add a 0 here at the end. I'll also add a 0 here. So that's 10 times higher, and then I give it a risk score of 4. I'll copy that again and say, yeah, all good, but if it's even a higher amount, if I have all those limits, and again, this depends on your data and your processes, and where your thresholds might be for validation or approval, then you might have different values, of course. So I'll add a few more like these. So I'll just add zeros all the time. So wait, that wasn't right. Give it a value of 6 and maybe one more. I don't even know really whether I've got data there that match those, but this is just a way of example. So anytime it's just between, 1% of that limit, then I want to add it as a risk score. There we are. I'll add number 3. And do we find where it is not equal to 0? We have a few here. For example, 99,170,94 gets a value of 5. Here one just below the million, very close to the million, gets a value of 6. And here one just below 1,000 gets a value of 3. Again, those values are arbitrary. I just define them myself. Maybe this is a good time to repeat that you can do these in other tools as well. I just like working with this tool, but if you get the idea, you could use, even Excel to a point. Will be difficult next week, but in this case, if your data fits into the limits of Excel, you might actually be able to do it. But I would not advise it, not for data analysis purposes. All right. Again, I'll add a color. So the trigger, I'll add a trigger there. Can call it yellow. If focus indicator 3 is larger than 0, in that case, I want to see it turning yellow. I could use other colors, of course. What I could also do is I could click on the column, right click and say sort descending, so I get the highest scores first. I'll do that, but I warn you, it'll take a minute because it's sorting 1.8 million records. But there we are anyway. So this is the highest, and these are all the ones that stay just below the limit. If you're wondering, why does this turn yellow or turn 7.2? It's not below the limit, that's right. It isn't, and that's because I basically took a shortcut in explaining that the between function is inclusive. So if you remember your math days, inclusive and exclusive, those square brackets, whether they're turned inside out or inside or outside rather. So the between is inclusive. So if I want to be really exact and I want to see this as not included because this hit the threshold, then I need to exclude that. I can do that too, but I was basically going the easy route here. Depends on how your thresholds are defined. So I'll just turn it off. And let's go for the 4th indicator. Transactions during the weekend. We could use one simple filter, weekend, but in this case, I would like to make the distinction also between Saturday and Sunday. Again, is that a problem? Is that a transaction you need to focus on? I don't know. It depends on your data, it depends on your business, it depends on your processes. If you have a web shop, then I would assume a lot of the transactions would be in the weekend. So edit the table layout, and I'm going to go for FI number 4. The value, the default value again is 0. I'll give it a nice name, focus indicator 4, which is transaction. I'm going to use a condition again. In this case, date time. So I'm going to use a function CDOW. What it does is it will take a date field or date time field, like a timestamp, and it will return the day of the week, DOW, so day of week. And I want only the first 3 letters, for example. So I have SAT or sun for Saturday and Sunday. So if that is equal to SAT for Saturday, then I would like to issue a risk score of 1. And I'll duplicate that for the Sunday, lazy as I am. So if it is equal to Sunday, then I want a value of 3, for example. There we are. This is our 4th, and I'll add that to the view as well. And again, I can add a trigger now. So if fi4 is larger than 0, then I want it to be, let's go for blue for once, take a different color. And if I then use it as descending or quick, let's go not equal to. I can see a lot of them on Saturday or later here, Sunday. Okay. So this is our fourth indicator. Number 5, rather more complex. And for that, I'd like to illustrate a function. Let's say add a column, an expression. It's in the date time series, hour. So based on the date time field, in this case, timestamp, I want to extract the hour component. And I'd just like to add that to the view so you can see what this function does. So here I have a transaction, 3rd of January, 19:02, and then 31 seconds. I don't care about the 2 minutes and the 31 seconds. I just want to get the hour component out of it, okay? And that's what I'll use to create this next indicator. What are your normal working hours? Are you working in a 9 to 5 type of business? Other transactions, I don't know. So what I'm doing here is if I define a normal business day between 8 and 1900 hours, for example, that's my normal window of doing transactions. Anything outside that might be a higher value of risk. So I'll just remove, well, I'll leave it in for now, but I'll just create a new one. So it's FI number 5. And I'll give it a nice name. So transactions outside working hours. In this case, I'm going to approach it rather differently because of the way the between works. So by default, I'm going to say I'm going to add a value of 3. That's strange. I'm going to say by default, all transactions get a risk score of 3. Okay. However, so this is the inverse logic. However, if it's a transaction between 8 o'clock in the morning and 1900 hours in the evening, then I think it's a normal transaction. So I'm going to add that condition, and I'll be using the between like before. So the between, as I mentioned, 8 in the morning, and I'm going to say 18 because of that inclusive nature of between. So 1900 hours in the evening would be outside of this range, but 18:59 would, as a 18 hours or 6 o'clock 59 minutes would still be within this range. So if this is my normal range, then that's okay. And I'll use the date time function rather than the value. I'm going to use the hour component of that timestamp. So again, I'll use a timestamp field. I use hour as a function to get the hour component out of that date and timestamp. And then if it's in between that range, all right, then that's a normal transaction. And I give it a value of 0, a risk score of 0. I am going to duplicate that and say, well, sometimes people start a bit earlier. So I'm going to change this so to 6 in the morning and 20. So it's nearly 9 o'clock. So 20:59 would still fall within this range. If that's the case, it's not 0 anymore. It's just slightly elevated in terms of abnormality in my business, at least. And then one more time. Sorry, is that, yeah. If it's between let's say 4 in the morning and 22, it's rather abnormal as well. It's not the highest value of abnormality or risk. I'm going to give it a value of 2. So again, the other ones that are, let's say, at 3 in the morning would get a default value of 3 or exactly midnight as well. Okay, so this is using the inverse logic of the risk scores from before. Yeah, and I'll add this to the view as well. Yeah, and here, for example, this transaction 6 past midnight gets the highest risk score for that type of transaction, and I can lose that column there. All right. The final and the sixth indicator I would like to use now is non-working days. We have many different ways to look at those. We could have an external file where all the non-working days, holidays, public holidays, or festive days would be indicated. It could also be a day that the business is closed for, I don't know, a training or a conference, anything of that kind. And what we'll be using here, rather than an external file with all the dates, I'm going to add new conditions for the typical non-working days. And get back to the tool. Here we are. In this case, I would like to say, for example, New Year's Day, Christmas Day. In Belgium, we have regional holidays on the 21st of July, the 11th of November, the 1st of May, for example, for Labor Day. So we have typical days here. And the way I would like to match that is to use the date component, the combination of month and day. And like the hour, I would like to illustrate that first. So if I'm going to add the expression, again, it's a date time function, date, very simple. And I want to replace these parameters with the date stamp or timestamp. And I want to show that as month, day format, basically. Copy that because I'll need it in a second. Yeah. So here we have that component. So January 2nd, as you can see, January 2nd, or if I just randomly go down a bit, I've got June the 6th, so June the 6th, or July 20th. So I will use this format basically to trigger whether or not it's a special day. I can remove that, and I can add focus indicator. Sorry, not here. Bad habit. Focus indicator number 6. The default value again, being 0. Give it a nicer name. Non-working day or something like this. And the condition being, and I copied that expression from before, if that timestamp is basically same as New Year's Day, so January 1st, then I want to give it a risk score. And in this case, I give them all risk score number 2, but you could say this is a more important holiday than the other one. Just duplicating that condition a couple of times, and then maybe Labor Day, so May 1st, maybe July 21st, November 11th, and finally Christmas Day on December 25th, by way of example. So there we are. And I add that final risk or focus indicator, fraud indicator there to the view. Again, it depends whether what is normal for you in the business. Now I have 6 indicators, and well, basically now what? What do we do with those? Yeah. So we could basically total them all up to come to the total risk score or total indication, and we'll do that now. So did I already create a trigger here? I did think not, so let's just do the final trigger. If number 6 is larger than 0, I want it yellow. There we are. So finally, I would like to have one overall indication. And again, I'll use a table layout, which is basically the metadata between the data and what you see in the view. So that's why we don't need to edit the data. We store all these expressions in this table layout. And I'll call that phi total. And there's just one default value, and that's basically number 1 plus number 2 plus number 3 plus number 5 plus 6. Did I get that right? And I'll use the total of all indicators. That. And I'll put that here in front. And now we have the sum of all these. And I can sort these, for example, in descending order, again, with a warning that it's sorting nearly 2 million records, so it might be a bit. There we are. Oh, I sorted the wrong column. My apologies. So now it's going through all these conditions of all these 6 indicators. Okay, there we are. And I could then use, let's say, another trigger to say if this total, let's say, is larger than, I don't know, 10, by way of example, then I want it red. Okay. If I want an amber one, if the total is larger than 8, okay, and then a final one, a yellow one, if the total is larger than 6. But again, that depends on the data and the results you get in that type of analysis. All right. Okay. So then we kind of have this range of risk. Okay. Now, everything I've done, as I mentioned, is created and stored in this log. So all the fields I created are stored in the log, and I just can, if I wanted to, myself copy that and create a procedure like that and paste all that information in. Or if you work as a team, you might have people that are very good in this type of, let's say, more coding type of approach. Let them do that, and you can simply run those procedures and get the benefit of their efforts. Okay, so finally, I could say, look, I want to see the list of all these transactions where the risk score is higher than, I don't know, 7, for example. I can say data, extract entire record to transactions of interest. Yeah. If the total is larger than 7, or whatever the cutoff point may be for you, it's going through all the transactions and writing out only those transactions that match this criteria of a total focus or fraud indication of 7. Yes, please. And here we are. So here do we have that table, basically, of only, let's count them, 25 records based on the total risk score that we created by, again, arbitrarily assigning risk values for each of these indicators. Okay. If you have something like that yourself, what would you then do? This is, a first level of analysis. Let's find the most interesting transactions out of the very big bunch. And then I guess you analyze them further. I don't know, this is a question to you. What do you then do? Because this is not the end all of the analysis. This is basically the starting point, I would think, for the next phase. Maybe there's a manual process. Maybe you need to focus on that. Maybe you need to look at the transaction or the vendor or the client or the employee, whatever it is. It's not the end point. This is just lifting out a subset of the data from the 1.8 million transactions. Based on the rules we defined, we get a couple of dozen transactions in the end. All of the rules we defined are based on certain hypotheses. So what is a normal business day for you? What is a threshold for you? My question to you again, and I repeat, do you have other rules that might apply to your business? Again, I've seen the question about voided or cancelled transactions. I would like to go into a discussion about that, but do you have other rules that you can define in your business? I look forward to seeing that in the chat. If you would like to work with Analyzer the way I did as a tool, my suggestion by way of a next step would be to have first a meeting. Yeah. Please contact me. You have my details. We'll set you up with a trial license basically and get started together, and then we'll see where things go. Dimitri asked about a large number of small transactions. Yes, would that be like a way of detecting split payments, that type of thing, Dimitri? Is that what you're looking for, that people stay under the limit but divide the large? Okay, thank you. Yes, this was actually one of the fraud indicators I had planned for next week, but I thought I have quite a few already. I will leave it out, but maybe I'll put it back in then rather than and replace some of the things that I had before. I don't want to overdo it in terms of indicators. I could do 20 maybe, but then an hour is simply not enough. So I'd rather limit myself basically to a handful and really go through all the steps so you can see it and you could replicate it in your own environment with your own data and your own tool for that matter, rather than just rush through it and then see, oh, look what I've done. So again, I'd like to take the time to look into each of those indicators in depth, but feel free again to contact me if you want to explore any particular indicator more in depth on a one-to-one basis. So what we cover today is a short introduction. I illustrated the webinars that were planned for this year. Again, there's one next week. There's also the question to you, and I haven't seen too many suggestions yet as to new topics. We defined which 6 indicators we wanted to create today. I explained why Arbutus Analytics is one of the very good tools to do that. And then we started actually in practice implementing the indicators and seeing the next steps. Okay, are there any questions that we have time for at this moment? Take a note, this is me. You can find me on LinkedIn, you can find me at the other end of that phone number, or you could just email me and I get back to you. So if you have suggestions for new topics, questions particular to your process, to your data sources maybe, please feel free to reach out and we'll continue this conversation. So thank you all. Thank you for your feedback there as well. Thank you all very much for attending this webinar.